Hello, everyone, and welcome to another episode of For Our Financials Financial Forum. As promised today, we will, in our Wealth Wisdom Corner, we will be talking about HSAs, which are the fourth part of our tax-free retirement strategy that we want to share with everyone. But as always, we will begin with our first two segments, which are Markets in Motion and Finance in Focus. And as always, we have Jeffrey Campbell here available as well, providing insight and information to the people out here. So, without further ado, let's get started. So, first section up is Markets in Motion. So, this week's market story was a little bit of a roller coaster, but we still ended up in the green. The S&P 500 finished up just over 1%. The Nasdaq gained about a point and a half, and the Dow added a modest quarter of a percent. So what was the common thread amongst all these? Of course, tech again was the leader doing the heavy lifting.
hmm And we kicked off the kind of shortened week on a cautious note. Investors were still trying to figure out how fast-moving AI developments might shake up the software world. And that kind of uncertainty, it kept early gains pretty muted. So,
Yep, and then but by about the middle of the week, the tone shifted again, and the
hmm
Federal Reserve released their minutes from their January meeting, and that helped to kind of calm people's nerves a little bit as well. And it also gave the mega cap tech names and some of the smaller players a little bit of a lift too.
yeah. But then the sentiment flipped, and tensions kind of in the Middle East and renewed concerns about the private credit weighed on the markets. So we battled with that, and then Friday changed everything.
Yep, Friday was the big boom. Supreme
hmm
Court struck down the White House tariff plan, and that actually sparked a pretty broad market rally, and that's what got us back into the green.
Yep.
And that move was strong enough to overshadow two things that we'll talk about a little bit later in the segment that normally drag markets down, and that's that inflation data. So inflation is still sticky, and we had a much softer than expected GDP report for the fourth quarter, and that's causing a little bit of turmoil as well. Um, but we got one other particular thing we got to talk about, which is everybody's favorite stock, and got hot for a second. So clue us in on that, Jeff.
Yep, and that stock is Nvidia, the one that everybody loves. So, on the visuals this week, Nvidia stood out. The stock has been trading in its tightest range since 2021. And that kind of quiet trading usually means the market is bracing for a big move. So let's kind of wait and see what that is. And then with earnings right around the corner, investors are clearly expecting something meaningful. So we're kind of see what Nvidia's got in store for us, but signs are showing that something big is on the way. So.
Yeah, and I think it shows up this week on our tickers that are reporting. So we'll get to
hmm
that. Yeah, a little bit later. Um, all right. So that's kind of the markets in motion. Now let's drill down a little bit on some of these concepts, and we'll get into our finance in focus. So again, Friday's economic data reshaped the expectations kind of across the board. So like we said, fourth quarter GDP came in at only 1.4%, which was well below what we expected or economists expected at 2.5, and it was a huge slowdown from that 4.4% pace that was in the third quarter. Where did the weakness come from? Mostly from softer federal spending and a huge pullback in consumer spending in the fourth quarter.
And then layered on top of that was the Supreme Court's tariff ruling, which we got to see. So, and that decision wasn't a surprise, but the timing of it is what kind of caught the markets off guard. But still, investors welcome it, and without the tariff overhang, companies may have more flexibility on prices, and markets responded quickly to that. So,
Yeah, absolutely. Yeah, if you're a business owner now, you can unleash those tariffs. That creates margin, and
hmm
margin creates safety. And now we can be a little flexible, so maybe we can get the consumers back to the table.
yep,
Yeah. So like we're saying, throughout the week, investors were positioning ahead of the Friday's data, not knowing, like you said, Jeff, that the tariff was going to be announced. That decision was going to be announced. But
hmm
still, that tariff uncertainty and that inflation was why we had that roller coaster ride. Um,
exactly,
and what else is going
exactly.
on in the economic calendar here?
Yeah, well, the economic calendar is a little bit lighter, but still meaningful. So Monday is going to bring us some December factory orders. Thursday gave us weekly jobless claims, and then Friday wraps up with the um, producer price index and updated construction spending numbers. So, like I said, much lighter on the economic calendar this week, but it's still meaningful stuff. So,
Yep. And excuse me, as we were saying, Nvidia reports on Wednesday, so be on the lookout for those swings with Nvidia. TJX as well. Dell reports Thursday, and our favorite person who kind of leads our market, Mr. Buffett and Berkshire Hathaway are reporting on Friday. All right, what else we got
mhm.
going on around the world?
So globally, we're seeing several interesting themes that continue to kind of shape sentiment. One of those is the uncertainty around the U.S. trade policy, which we were kind of just all touching on. And then we kind of more of a bearish tone in the bond market. Gold is still extending its gains though, so physical assets on the rise still. Noble Nordis losing ground to Eli Lilly after disappointing trial results. And then we got some rising concerns about how much Amazon, Meta, and Alphabet are spending on AI infrastructure.
Sure. Yep.
And hmm and then meanwhile, the EU is frozen tariff ratification, another sign that trade tensions may not be cooling anytime soon. So still got to keep an eye out on that side of things.
Yeah, this tariff fight has really got us up in the air. We have no idea which way this is
Yep, it's a battle.
going to play out. Yeah. So going to be interesting.
Hmm
Like we said, of course, the big AI story of the week is going to be those Nvidia earnings. And
hmm
Jeff mentioned earlier, this stock has kind of been stuck in this little tight trading range, and which means people don't know which way to go. So a strong or weak report could certainly trigger a huge move with Nvidia and just general AI demand.
hmm
We'll keep watch out for Nvidia this week. All right, so that brings us to our wealth wisdom corner for the week. Step four is we're talking about this 4 point, this 4 part plan, 4 part accounts that you need this week. Health savings accounts, um, most efficient thing we can talk about. And as we say next week, we're going to bring this all together with a full example, tax
hmm
return, and everything about how you actually execute this strategy. All right, so today, again, in Wealth Wisdom Corner, we're diving into one of the most powerful tools in personal finance, and that is the Health Savings Account, or HSA for short. So if you've ever wondered how HSAs work, who qualifies, how they can help you build long-term health, this part of the segment is just for you. So we're going to kick things off with the basics. We're going to first talk about the HSA rules, the limits, and why this account is such a unique planning opportunity. All right, so Jeff, take it away.
Yep. So it kind of starts off with the rule and limits. I kind of describe how HSA works and what it is exactly. So essentially, a health savings account lets you set aside pre-tax dollars to pay um, how much you contribute, what expenses qualify, and whether your health insurance plan allows you to even have HSA. So essentially, it allows you to pay for health expenses and putting money aside for that on the pre-tax side. Um, And then kind of before we go deeper, we'll kind of highlight the key takeaways because the HSA is really one of the more flexible tools that we can dive into. So HSA will help you save money on covered healthcare expenses because contributions and qualified withdrawals avoid federal taxes, which is important. Second, until age 65, the HSA funds must be used for qualified medical expenses to avoid a 20% penalty, which is also important. And third, you can only contribute if you're covered by a high deductible health plan. But once the money is in the account, it's yours for life. Um, that's important stuff that we're seeing. And then, kind of, as one advisor will put it, HSAs are the Swiss Army knife for financial planning because they're the only account with triple tax advantages. They're triple tax free because of those things I was just describing, those key takeaways that we get from it. So,
Absolutely, absolutely. All right, so now that's kind of the big picture on HSAs, the rules and all that stuff. So now let's talk about who's actually eligible to open and contribute to an HSA.
so to qualify for HSA, you must be enrolled in a high deductible health plan or HDHP. These plans typically offer lower monthly premiums but higher deductibles. So Keep that in mind. And then for 2026, the minimum deductible is $1,700 for individuals and $3,400 for families, making a maximum out of pocket limit that is 8,500 for individuals and 17,000 for families. Um, and then you can keep your HSA forever, but you can't contribute if any of the following things are true, and that is you're no longer covered by the HDHP. You have other health coverage, including Medicare or FSA, or someone else can claim you as an independent. That's important. Another important note is that you can still open a HSA, excuse me, even if your spouse has a non-HSA eligible plan. As long as that plan doesn't cover you, you're still eligible to open up one. So, like I said, just don't be covered is probably the key thing to take away from that last part.
Sure. Yep. Okay. So once we know a person's eligible, then the next question is how much can they contribute?
So for 2025, individuals can contribute up to $4,400, and then families can contribute up to $8,750. If you're 55 or older, you can add an extra $1,000 each year as a kind of a catch-up contribution, kind of similar to how you see it in other retirement plans. But once you're enrolled in Medicare, you can no longer contribute. So remember that enrolled in something else part is important, but you can still use those funds. So that's important.
Absolutely. Quick typo there in our notes. Actually, those numbers Jeff gave you, the 4,400 and the 8750, are actually for 2026. So we had a typo
Okay.
in our we had a typo in our notes there. But anyway, so let's shift to the tax piece, that triple tax advantage that we love, because this is where that HSA really shines. So let's talk about the
hmm
HSAs and the taxes.
So, if your contributions come straight from your paycheck, so straight from your money, is they're not taxed. That's before you pay the taxes on it. You can you if you contribute on your own and you deduct those contributions on your tax return, your investments grow tax deferred and withdrawals for qualified medical expenses are tax free, which is extremely important because not only do those investments delay the tax for you, but when you withdraw that money for a qualified medical expense, you don't have to pay any taxes on that money at all, which is important. So if you use the money for a non-qualified qualified expense before age 65, you owe income tax plus a 20% penalty. After age 65, the penalty goes away. You just pay the income tax on non-qualified withdrawals. And then if you pass away, your estate can withdraw the funds without the 20% penalty as well.
Got it, got it, got it. So just quick recap on that triple tax that Jeff was
hmm
talking about. So when you deposit the money into the account, you get a tax deduction. While the money's in the account, it can be invested and grow tax deferred. And
hmm
then finally, in retirement, ideally, or at any time, you can pull out for medical expenses tax free. So that's
hmm
the triple tax thing, triple tax advantage that we're talking about. All right, so now let's kind of be clear on defining what exactly is a qualified medical expense.
Exactly. So HSA funds, I'm struggling over that today. Funds can be used for a wide range of medical costs, treatments, diagnosis, preventative care, prescriptions, over-the-counter medications, contraceptives, menstrual products, co-pays, co-insurance, and deductibles. So a long list of things, but a wide range of different medical costs. And expenses can be for you, your spouse, or anyone you claim as a dependent, or could have claimed as a dependent, which is important. So you generally can't use HSA funds for insurance premiums except for the long-term care insurance, COBRA, and certain unemployment related coverage, and then Medicare premiums. And remember, the money is available whenever you need it. There's no expiration date on that money, which is also extremely important. So,
Gotcha. Now I know earlier we talked about and you mentioned that it's yours forever. So what happens if you change jobs or you switch
mhm.
plans?
Now that's a good question. So your HSA is yours for life. If you leave the job or move to a non-HSA eligible plan, you can still use the funds for qualified expenses. If you open a new health savings account, you may want to roll over your old one, either for convenience or to avoid fees. So, and then rollovers are typically tax free as long as the investments aren't sold during the transfer. So that's important to work with whoever's handling that rollover for you, that those investments aren't sold during that transfer. And depending on the provider, funds may have direct, directly or may move directly or require liquidation first. So, like I said, it kind of depends on the provider with that too.
Yeah, so kind of almost like the IRA rules, from a
Exactly.
normal 401k to an IRA or a Roth 401k to a Roth.
Hmm.
You got to keep the same classifications in order to not trigger any taxes. All right,
Hmm.
so we've hit you with the rules, how you contribute, eligibility, numbers. So let's kind of bring this all home in summation of this health savings account, its effectiveness, and what it does.
Yeah. So at the end of the day, the bottom line is high deductible health plans come with higher out-of-pocket costs, but pairing them with a health savings account can soften the blow exponentially. Um, if you don't use funds often, one, the tax-free growth can help build a powerful pool of money for future medical needs or even supplement retirement savings. So health savings accounts reward long-term thinking, disciplined saving, and smart planning as all the strategies in our plan and our tax saving plan that we mentioned on this podcast series have been. So very a lot of similarities between the other, and they all work in cohesiveness together. So
Yeah, absolutely. Because we already know when we're doing planning that um, healthcare costs are going to rise in retirement. I mean, we
yep,
have health issues. We start having prescriptions and
yep.
more visits and things of that nature. So if we can create that bucket of money, we can free up your other funds to do the things you want to do, your bucket list of travel or boat or what it may be. So
Hmm.
awesome. All right. So again, that completes the fourth of our things that we need: the traditional IRA or your 401k account, your Roth or your Roth 401k, your taxable brokerage account, and finally the health savings account. So we're going to bring it all home next week with a really detailed example, and then it becomes getting everybody in action and taking the steps necessary to put the plan in place. So again, this wraps up today's episode. Hopefully you found it helpful. If so, please share it with a colleague, a friend, a buddy. Again, we are so excited and intentional about trying to get information out to the public. Um, so until next week, again, please tune in, subscribe to the channel, um, look for us, Apple Podcasts, Spotify. We've got a bunch of stuff coming up in the community. We're speaking tomorrow night in Durham. Um, Series at both of our churches are coming up.
Hmm.
Speaking to a nursing group, Piedmont College, end of the month.
Hmm.
um, and just a whole host of people. Gosh, what else? Oh, then March 10th, we've got the tax efficient real estate investing webinar. So
A
be
great
sure
speaker.
to, be sure to subscribe to the tax efficient webinar on our website, forourfinancial.com. So a lot of good stuff coming up. Taxes, taxes, taxes. How to beat these taxes. That's our game plan. So until next time, we'll see everyone. Bye. Have a great week.